Hello everybody and welcome to your Calgary real estate market update for September. The last couple of months we've seen prices level out and sales start to come down. So many are wondering what August data set will show and whether or not we're heading towards more balanced market conditions. Well, today I'm going to take you through all of that, and I'm also going to share a little bit of national level news that's relevant for any Calgary real estate consumer. So let's go ahead and jump right into that. So last month, our average sale price was just under $607,000, nearly an 8% gain year over year from this time last year. And September's numbers, or August data set, have shown that prices have decreased to just under $602,000, giving us a year over year increase of 6%. So another month where we've seen prices come down just a little bit. But the real story here is in the underlying metrics behind this, where we've seen inventory come up, 37% more inventory on the market now than we had this time last year. Sales are down by almost 20%. Months of supply has now eclipsed the 2-month barrier and is up by 70% from where it was this time last year. That's a different market condition, and I'm going to show you this more clearly in another slide or two here, okay? And then we've got new listings that are up by 13%. So more inventory, more new listings, fewer sales means more supply on the market relative to the number of buyers that are there, which means we're going to trend towards more balanced conditions. And you can see this a little bit more clearly if you look at the price versus sales graph that you'll see here. So we've now had 2 months worth of declining prices after leveling off for the last few months, okay? And we're seeing sales now coming down following their traditional seasonal pattern where we pick up sales from the beginning of the year through to about the halfway point, midpoint of the summer, and then sales start to come down from there. So that's not unexpected, but what we wouldn't expect to see would be declining prices 2 months in a row. That's the first time that's happened in the last 18 months that we've been tracking this data set, as is the months of supply coming up over the 2 months worth of supply barrier. That's the first time that's happened in the 18 months that I've been tracking these data sets as well. Okay, so we're on a course now to enter into balanced market territory in Calgary sometime before the end of the calendar year. So this is a real breath of fresh air for the buyers out there that have felt like they're under a lot of pressure. They have to write offers with no conditions. They only get a very short time to see property. I think this is a good sign for our market to just kind of even out a little bit, take a little bit of a break. Our year over year sales figures are still really good. We're the same as we were last year. We've come up by 9% in price from where we were this time last year. So overall, a very healthy year. But because we got such a hot start to our market in January, we're just running out of steam a little earlier, and there's a little bit of buyer apathy out there right now, which is resulting in listings languishing a little bit and a more balanced market condition. So we'll see what will come of that here in the months to come. But to really understand where there is or not oversupply, but more supply in our market, you have to look at the price ranges because housing affordability is a huge factor right now. People are limited by what they can afford with such high interest rates and high prices right now. And so you have to look here in terms of the total inventory by price range and then contrast that with the sales in that price range as well. Okay, so we're seeing more sales in this $300,000 to $400,000 range here that you'll see. In addition to that, we've got more inventory in that range. So this is where you're going to find the apartment style condos. There's a lot of condo product that will slot in this price range. The average price of a condo in Calgary is about $350,000. So square in the middle of this price bracket. But then under that or after that, for the next 3 price ranges until you get to $700,000, we're still in seller's market territory, very strongly in seller's market territory until you get to $700,000 and above, and then we're back in a bit softer conditions. And so I went and put in the month's worth of supply for each of these price brackets. I'm kind of eyeballing this when I did it because Krebs doesn't give you the actual numbers to use. So I'm going off of what I can see on the graphs here, but we're under 2 for between $400,000 and $700,000, which is the heart of the market here in Calgary. We're above 2 for where we're going to see all these condos in between 300 and 400. You're not going to get a detached house in that price range. And then once we're up over $700,000, $600,000. We become much more balanced and then into buyer's market territory if you're shopping above $1 million. Okay, so what this is telling me is that Calgary consumers are taking on aspirational pricing for their higher priced properties. And this happens after you've had a boom market for a couple of years. People think their house is worth so much money. They list it up really, really high because they expect the market to get there. They're reading all these stats about such a hot market, and then the listings sit, all right? And that's what's happening in these higher price points right now, is that the buyers are just not seeing it. They're not coming with that much equity. They're not taking on a lot of debt because it's expensive to buy up in those price ranges. And so we're seeing these listings sit there, and that's pulling up the overall month's worth of supply metric for the whole market. So while the numbers will show us that we've got over 2 months worth of supply up here, I do feel that it's still going to feel like a seller's market if you're inside the heart of our market between $400,000 to $700,000. Okay, so important to take note of that, and we'll watch here over the coming months to see if we get into this balanced market territory and what that market will feel like. Okay, so we'll watch for that. Housing affordability is making the news here now, seen across most of Canada, and this is a result, or better affordability seen across most of Canada, and this is a result of decreases in interest rates, which makes mortgage payments more affordable. And today we had a third announcement from the federal government, the Bank of Canada rather, that we're cutting our key interest rate down to 4.25%, saying they want to see more growth, but what they also want to see is more sales in the GTA and some of the bigger markets in Canada. And so National Bank is one of the banks that does a really good job of analyzing the housing market in Canada. They do obviously a lot of mortgage business, so it's in their business to know this. And you can see here that affordability has improved in many markets, but not in Alberta, not in Edmonton and Calgary. So this is based off of the end of the second quarter data, so the first half of the year when things were just flying in Edmonton and Calgary. And so it doesn't surprise me that we appear less affordable than our counterparts in other major municipal centers. And I wonder what these numbers will look like if they were to look at how our third quarter and possibly our fourth quarter is going to be doing, as we seem to be coming down a little bit to earth with that. But at any rate, housing affordability is improving. Calgary is still very affordable when compared to all of these other markets. So we're the gold line down here, and you can see that in terms of the monthly mortgage payment relative to median home price, all different types of dwellings that they have here, we're very affordable compared to these other markets, and considerably more affordable than the Canadian average. All right, so that's really good news for Alberta's market, so we can attract good labor, we can have a young, a growing, and healthy population because they can put down roots here, build a family because they can afford a house. That's good news and a trend that I hope continues. So perspective is always nice. So National Bank also included this slide that will compare major municipalities in Canada with the world. And so you can see here, by comparison to some of the major cities like Tokyo, Hong Kong, New York, San Francisco, Calgary at $300 per square foot to buy is quite affordable compared to some of these markets. Okay, so I think that was interesting to see anyway. So back over to this report from National Bank, they're going to tell you that if you want to buy a property in Calgary that's not a condo, you can expect to pay about $711,000. And with current mortgage rates, you're going to need about $170,000 of income to get into that type of property. For a condominium product, it's a little more than half of that, so $384,000, and you're going to need $94,000 of income to be able to get into one of those. With respect to renting versus owning with housing affordability, well, it's still considerably more expensive on a monthly basis to own rather than rent. So National Bank's analysis here only compares the rental rate versus the mortgage payment. They're not including the other expenses that homeowners would have to consider, like their condo fee or their insurance or their property taxes, which is going to push the overall cost of homeownership up even further. But when you compare the cost of renting and what you're getting out of it versus the cost of your housing costs and all of your expenses, when your house prices are going up 9% a year, you're still better off owning, obviously, if you can make the stretch to get into a property. Some good news here from the federal government with respect to addressing low-income housing. They've done a move here, which I'm a big fan of, which is identifying properties all over the whole country where the federal government doesn't need it. And so they're going to offer up this land on a lease basis to private developers to come in and build affordable housing projects. So this is good news for a couple reasons. For one, it's the government adding supply into some of these markets. The real estate is usually well located where the federal government has it. And they're leasing this land to developers, which means they get to control what gets built there. And it also means that the developers don't have to pay the capital cost to acquire the land and then hold it for the time where they get all their permits ready for construction. So it lowers the cost and reduces the risk, which is going to make it more economic for these developers to build units that will generally or genuinely be affordable for residents. So in Calgary, there's two different sites here that I'm going to show you, then another one here in Airdrie. In Calgary, these are on CFB Curry, the Curry Barracks area, which is just west of Crowchild Trail, north of 50th Avenue and south of 26 is where you can see these. And this is why it makes sense, because these two parcels, one is just a piece of land, right? It's just empty land, not even being used. And the other one is a parking lot. So a great move by the federal government here to open this up. These are going to be affordable housing projects that are centrally located, close to schools, hospitals, a downtown, all that stuff. Exactly what we need to be seeing. And so a move that I'm pleased with. And Airdrie, it's on the corner of First and First, right downtown. There as well. The building itself here is directly across from the courthouse, and you probably have driven by this building if you've been through Airdrie and never even seen anything going on there. It's just one of these buildings you just never notice. So the government doesn't need it, and they're saying, hey, developers, come take this site, go ahead and build something on it, and that could be really good for Airdrie and anybody needing affordable housing there. So that's good news. So let's just see what's going to happen here over the next couple of months. I'm keenly interested to see if we're going to have months of supply hit that 2.5 months worth range, enter into balanced market territory. That's, I think, good news for consumers and sellers, a balanced market, or buyers and sellers to be in a balanced market. So we'll see what happens with that over the next coming months. Be sure to watch our channel and you'll find out here. So thanks very much for watching here, guys. As always, if you've got an interest in real estate, whether you're buying or selling, we'd love to help you out here at Redline. Thanks very much for watching. We'll see you guys next month.